Welcome to readtheticker.com. Today we're going to talk about the market generally. Some of the charts that we show in RTT Plus, let's go to the services, and you'll learn about our services here, but RTT Plus is explained here. It's the private service I offer, and the insights, and talking about Wyckoff, Hurst and Gann, and obviously general market thoughts. But the last 3 weeks have been quite interesting. I just want to show off some of the charts I've been looking at privately. The first one is showing off cause and effect of the S&P 500. Now what's actually happening here, we've had from the 2009 lows, we had a cause here and a 3-to-1 effect ran out about here. Then we had some serious consolidation. Then we had another cause build up with an effect. And this is pretty much what you call a stepping stone, because this is the bottom and this is a continuation pattern. And as you can see, this is a bit of an older chart. It was done on the 2014, but we haven't really gone much. We've only got up to about 2001. So this is where the energy runs out between 2000 and 2001. So what I'm trying to say, we have to build up another cause up here before we go higher. But this is why we get in distribution at these levels. And obviously if there is no strong continuation built up, we most likely won't be going higher. We just have to watch what happens, what's going on. The cause and effect. And what's important, this chart shows this is the energy. A lot of people invested, and now they've made their gains. And distribution is just a natural form of things. Here's another chart. Just got to fit it into my video screen. Oops. Okay, here we go. Sorry about that. So here we have a situation showing where the US dollar got stronger, stocks started going sideways. That means people started to distribute. Obviously, a lot of international companies. And therefore, the dollar got extremely strong, and as you know, it's going a bit higher. I believe the strong US dollar stunts the chance of this to be going higher. Stronger US dollar, higher exports. We all know, like Caterpillar and McDonald's, all these other stocks, they sell stuff overseas, and if the dollar's going higher, revenues are falling. So I don't really believe we're going to get massive gains to the upside while the dollar maintains its strength. Here we have an interesting chart. It's the NYSE index. It's a, what have we got here? It's a monthly chart and it's a log chart. So, and here we have a 36 simple moving average monthly on it. And the red dots symbolise where price fell from above down to below the 36 SMA, which highlights sort of the first freakish scare you ever put. And as you can see, the last couple of dots, these happen to be recoveries. We're waiting to see what happens here. We've had a challenge. Just before 2007-8 crash, we had a challenge, but then the recovery was poor and it collapsed. This challenge here was actually September 11 and recovered, and President Bush did some printing, but it still collapsed. And the previous three were continuation. One was 1987. And these are minor little hiccups, and this is the great big bull market on 1982. And obviously further down the track, a lot of these are continuations out of the, I think it was after 1975, which is obviously the big oil OPEC scare, and we're obviously in inflationary times before that. So here we can sort of see whether the challenge to the 36 simple moving average was recovered from or further collapsed. Quite frankly, I'll be a bit nervous right now. As I explained before, we've had a cause here, energy release, and we've got distribution. And the recovery in the NYSE, which is 2,000 stocks, has been quite poor. So the next couple of months, with the interest rate hike or not, will determine probably see what happens. I don't believe they're going to raise interest rates. I think they're just jawboning it up to keep the dollar up for some crazy reason. So I just want to be aware as the next 2 or 3 months, people will be either, hedge funds will be either raising cash, more distribution, buying defensive positions. I think Ray Dalio actually sold 30% of his stuff and raised some cash. So just be very, very cautious right now. It's not a good time to be aggressive. We just have to wait and see for the signs. Where the more volume comes, the push price is higher. And quite frankly, just might build a bit more of a cause up. Because a cause to go higher here would have to be pretty impressive. Now be aware the last 3 times SMA hit and had a test and failed, something bad happened. I wonder if we could possibly just have a very long extended 2016 going sideways, but just be careful out there. Thanks very much for watching.